So I think what's changed so far this year is that the Fed has been data dependent for some time, but it's been only inflation data dependent. And now they are still inflation data dependent, but they're also growth data dependent. And that's really important for multi-asset investors because it means that stock-bond correlations are starting to work in your favor again. We've seen over the past couple of months now that weaker economic news, and particularly when you think about what we've seen from some stress in the banking sector, is starting now to feed through into markets' expectations for where the Fed can move. So in terms of today's print, clearly markets will be hoping for another relatively soft number on CPI to allow the Fed to build this narrative that a pause is near. But ultimately, I think growth data today is effectively as important as inflation data.
Okay, so on that front, what was your interpretation of Friday's non-farm payrolls report and how that will factor into the Fed's decision making?
Of course, I think you're right to take the two in tandem. And for me, the jobs market that we had on Friday was cooling gradually. But when you think about what's driving inflation now, it's really shelter one and then core services, which is very closely linked to the jobs market number two. So I think the Fed can be looking at this data and understanding now that the case for them to pause is strengthening. Because there's a danger that if they were to keep hiking over the summer, they'd end up doing so, not because of what's happening in the economy today and what we're going to be seeing going forward, but rather looking back 3-6 months ago and saying, well, you know, the labour market was strong then and the housing market was strong then, and therefore we're going to keep hiking. So for me, I still think there's probably one more Fed hike to come, but that pause is getting ever closer.
What would it take for the Fed to pause at its May meeting? What would it take in terms of the CPI print today?
Sure. So I think an inline CPI print is probably enough for the Fed to hit pause when it comes to May. Because ultimately, why do they need to keep going when we know that the leading indicators is just suggesting that both shelter and services are going to start cooling? You know, you can look at things like some of the higher frequency rents data. You can look at some of the house price data to see that shelter is going to come off. And similarly, that wage growth number that we had on Friday was also cooling as well. So I think there's enough of a case for the Fed to hit pause. The case for cuts is a different story, right? Because we're still looking at inflation at pretty elevated levels. But at least the market can be looking at a Fed and understanding that they're feeling their work is now pretty much done.
Fascinating.